remark, which is going to be delivered by none but my colleague, Brother Adl Siddiq, who is one of our team member at the Adl Advisory Sharia review team. Is going to be standing in for our founder and CEO, who is unavoidably absent because he's on journey for his Hajj. Brother Adl is going to be standing in, and he will be giving us the welcome address by the founder and CEO of Adl Advisory. Brother Adl, coincidentally, your name is also Adl, so the mic is over to you. Thank you.
Thank you, Brother AbdulAkeem. Assalamu alaikum wa rahmatullahi wa barakatuh, everyone. Thank you for joining. So as just mentioned, a brief introduction on behalf of our founder and CEO, Dr. Mufti Yusuf Sultan, who could not be here with us today. So first of all, it is a great privilege to welcome you all today to this webinar to discuss this very important topic, global practices in Islamic pension fund management and investment, with a deeper insight on Nigeria. So first of all, let me extend the greetings of Dr. Mufti Yusuf Sultan to our guest speaker for today, Prof. Adam Muhammad Abubakar, who is an erudite scholar and Islamic finance expert, a lecturer, and of course, the perfect fit for the topic of today. So for a bit of a background on today's topic, the Nigerian Islamic finance landscape is an industry that stands at the confluence of ethical investment, financial inclusion, and national development. And in recent years, Nigeria has made significant strides in aligning its financial architecture with Sharia-compliant principles. Today, this sector is not just a niche, it is a rapidly growing component of a broader financial system. Now, as of 2023, Nigeria's Islamic finance assets were valued at approximately $2.9 billion, positioning it as the second largest Islamic finance market in sub-Saharan Africa, according to the Islamic Financial Services Board, IFSB. The industry spans Islamic banking, takaful, sukuk, and more recently, the topic of today's discussion, Islamic pensions, which is a segment that holds transformative potential for retirement planning among Muslim Nigerians. More recently, under the regulatory guidance of the National Pension Commission, the multi-fund structure introduced in 2018 includes a fund called Fund 6, specifically tailored for contributors seeking Sharia-compliant investment options. And according to the PANCOM annual report, as of the fourth quarter of 2023, Fund 6 has grown to over 26 billion naira in assets under management, with more than 95,000 retirement savings account holders, which is a clear indication of both demand and confidence in Islamic pension solutions. However, despite these achievements, Islamic pensions in Nigeria remain underpenetrated, with over 100 million Muslims in the country, representing nearly half the population. The opportunity to expand Sharia-compliant pension offerings is immense. So as we gather here today, let us consider not only the regulatory and market achievements so far, but also the untapped potential that lies ahead. Islamic pensions are more than an investment product. They are a bridge to financial dignity, intergenerational security, and trust-based financial inclusion for millions. So again, on behalf of Dr. Mufti Yusuf Sultan, I once again welcome all of our participants, and most importantly, I extend my appreciation to our guest speaker, Prof. Adam Muhammad Abubakar, for squeezing in his tight but valuable time to honor our invitation. I'll now hand it back over to Brother AbdulAkeem to continue the rest of the session. Jazakumullah khairan. Assalamu alaikum.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Brother Adl, for that delivery of the founder and CEO message to all our participants. And importantly, you've been able to help us to, through the message of Mufti, you've been able to lay the foundation, giving our participants some sort of heads up, if you allow me to use the word, trying to give them an idea into the Nigerian Islamic finance industry, and also trying to give them how Nigerian financial industry, especially the pension, has been faring, and how we are sitting on a huge fund which is yet to be largely maximized. I think this is going to form part of the conversation we are going to be having today. And like I mentioned earlier, we have the best fit for this conversation, which is also reiterated by our Mufti, and that is no other person than Prof. Before I introduce Prof to take the stage, for those that are just joining us, this is a webinar organized by Adl Advisory, which is a Sharia advisory company based in Kuala Lumpur, Malaysia, though based in Malaysia, but operating in different parts of the world. I think by now we are mostly operating from more than, let's say, 5 continents, speaking from South Africa to Tanzania to Australia to Canada to the US to the Middle East. I mean, Adl Advisory has been practically creating that bridge as far as Sharia services is concerned. And this is just one of our series of webinars that we try to educate our audience, the participant, the public, and trying to give them opportunity to see what is obtainable from different parts of the world, and also for them to understand how Islamic finance is growing largely and how they can also tap into this growth. Again, my name is AbdulAkeem, and like I mentioned, we are discussing today on global practices of Islamic pension fund, and we want to look at how it is managed and how it is also invested. And we are also going to be looking deeply into the Nigerian market. So today, like I mentioned, we have Professor Adam. Allow me to give you a bit of introduction to Professor Adam. He is such a very humble but yet highly loaded erudite scholar. By the time I start to reel out his qualifications, his experience, you'll be surprised. And I think the last time I was speaking to Prof, about 2 weeks ago, he was telling me that, AbdulAkeem, I want to inform you that I've also been called to bar. I'm a lawyer now. I was surprised that Prof, a lawyer, and this is so interesting. You know, this is someone who is not just a professor, not just a 1 PhD holder, is a 2 PhD holder. Allow me to share my screen and tell you a bit of our speaker today, so that we can have an understanding of whom we are speaking about. Today we have Professor Adam Abubakar Esquire. He is a professor of Islamic banking and finance at the Yobe State University, Damaturu, Nigeria. Prof is not just a professor, he's also a barrister. He's a barrister and also a solicitor of the Supreme Court of Nigeria, a certified Sharia advisor and auditor with IOFI, the Bahrain standard setting global organization in Islamic finance, and he's also a certified Islamic arbitrator and expert, which he got from the International Islamic Center for Conciliation and Arbitration in Dubai. And again, Prof is currently a fellow of the Institute of Islamic Finance Professionals, the institute that happened to be the foremost Islamic Finance Institute in Nigeria, which laid the foundation for other bodies, other institutions to come up. And Prof, importantly, is also one of those key people that also participated in the development, in the support, in the growth of the institute. And apart from that, currently, Prof is the chairman of the Pension Industry Non-Interest Advisory Committee, which is an arm of the National Pension Commission of Nigeria. Again, Prof is also the chairman advisory committee of experts, that is ACE, of Foremost Capital Limited, is the chairman advisory committee of experts again for Konos Investment Limited, and several other roles that he has played. Like I said, he obtained his LLB in Islamic jurisprudence from International Islamic University. in Niger Republic, and also Nigerian Law School in Yola, and again, having several other qualifications. And like I mentioned, the Prof obtained, apart from his PhD in Islamic banking and finance, he also has a PhD in Islamic financial jurisprudence from Al Madina International University in 2016. And on and on and on and on and on, I can start reading and reading and counting. And most importantly, it is key to mention that Prof is also a member of, like I mentioned, IIFP in Nigeria, and he has also earned several certifications. Now, inshallah, I'm going to, for the sake of time, I'm going to move straight to handing the mic to Prof, where he's going to be discussing with us based on the topic of today, inshallah, and would want to encourage our participants to kindly participate. Would want a lot of questions to come from you, and would also want you to contribute along when we have the time for taking interactive session, inshallah. So, Prof, I'm going to share your screen, if you allow me, so that you can present right from there.
Yes, you can share, please. Thank you.
Please, can you confirm if you can see my screen?
Yes, I can see it.
Okay. Now, so I'll now hand over the mic to Prof to take us through the topic of today, and we can take questions after the presentation. Over to you, Prof.
Okay, thank you very much, Brother Hakim. Bismillah, wassalatu wassalamu ala rasulillah wa ala alihi wa sahbihi wa man wala. Assalamu alaikum wa rahmatullahi wa barakatuh, my dear participants. Please, let me begin by recording my appreciation to Adl Advisory, and particularly the CEO, who is unavoidably absent, but ably represented by the namesake of the company, 𝐼𝐬𝐥𝐶. So what a coincidence, actually. So thank you very much. I appreciate you for reposing your confidence in me and giving me this opportunity to share our own experience here in Nigeria in relation to pension, non-interest or Islamic pension fund management in Nigeria, actually. So as presented by Brother Abdul Hakim, the topic of discussion is Nigerian practices in pension fund management and investment as part of the global practices, so that we can share our own experience and also learn from other jurisdictions globally. And the presentation, inshallah, is going to center around the the concept of the pension, the global practices of pension system, global overview of Islamic pension funds. Then we take an overview of the Nigerian experience. Then we take the Islamic pension fund management and challenges, as well as some of the prospects the system may have. So conceptually, according to the World Bank, pension is a system. Pension is a system that is designed to provide all-age income support, ensuring financial security for retirees for their So their multi-pillar pension model emphasizes the mix of public, private, and voluntary savings to create sustainable retirement benefits. The IMF also defines pensions as a long-term financial commitment designed to support individuals in their post-employment years, ensuring the economic stability. Organization of Economic Cooperation and Development describes pension funds as reserved, held by autonomous entities established by employers and employees to provide retirement benefits. Uh, Other researchers and scholars that uh, authored some books and publications in this sector. Adams 2005 defined pension as the amount paid by the government or company to an employee after working for some specific period of time, having considered too old or ill to work, or have reached a statutory age of retirement. Omar also looked at the pension that it add value to world economies through direct contribution to GDP, accumulation of savings, financial market development, reducing all age poverty, and acting as consumer of the financial services. As we can see, almost in all the jurisdictions, pension funds usually provide uh, the funds and liquidity that is required for many financial institutions. So therefore, pension funds contribute directly and indirectly to the economic growth of countries worldwide. Hence, the importance of pension fund to the economic development of any economy cannot be overemphasized. Usually, we have two types of pensions. We have the defined benefit pension scheme and the defined contribution pension scheme. These two systems are the ones that are globally practiced, and in some jurisdictions, they practice hybrid. That is, they mix the two systems, maybe the defined benefit for the public sector and defined contributions for the for the private sector. So for the defined benefit, pension scheme is a retirement plan where an employer guarantees a specific payout for the employees upon retirement based on formula that considers factors like salary, years of service, and age. So this is the defined benefit. While defined contribution pension scheme is a plan retirement that savings where employees and employers contribute a set of amount to an individual account. In Nigeria, we call it RSA, retirement savings account. The final retirement benefit depends on how much is contributed and investment performance over time. So these two systems are the global practices when it comes to pension system, but in some jurisdictions, usually the two are practiced together. For the sake of clarification, Sharia-wise, the first one has no much Sharia issues because it is deemed to be a kind of gratuitous arrangement from the government or from the employer to the employee who has served long time. So it is just a contract of not is not a contract of exchange. Therefore, many scholars give fatwa that it is allowed and there is no any Sharia issue with it. So that's why there is no need for any pension scheme under the Islamic pension scheme under the defined benefit. But when you talk of defined contribution, this is where the amounts that are specified belongs to the retiree actually, and they are invested, and there are a lot of issues either in the investments or in the way the retirement benefits are paid. So we're going to discuss all this in the course of the presentation. Basically, the major difference between the defined benefit system and the defined contributions is that retirement income, usually for the defined benefits, is fixed and guaranteed, while for the defined contribution is variable and it is based on investments and the performance of the investments. Investment risk also is the employer that bears the risk in case if the amount set aside is being invested, while in the defined benefit is the employee that bears the risk actually because he owns the entire balance of the retirement savings. So also the flexibility The defined benefit is not flexible, while the defined contribution is flexible because the employee has more control over investments. He can choose to move from one fund to another based on its volatility. Then is common in public sector. Defined benefit is common in public sector and large firms that are bigger corporates, while the defined contribution is usually used for the private sector and some startups. But in the case of Nigeria, but the defined benefit system is used also. So the defined contribution system is used both for the private and public sector, as we're going to see. Now let's take a kind of global overview of the pension system. As we've said that we have two major systems. So there are many countries that have hybrid pension system that combines benefits, defined benefit, and defined contribution to balance security and flexibility. But many countries still retain the DB, that is the defined benefit elements, to ensure retirement security. That is, at all they don't have the defined contribution. In the United States, some employers offer hybrid pension plans that mix DB and DC. In the United Kingdom, they are
Prof, are you there?
Yeah, so in United States, the employers offer hybrid pension plan that makes defined benefit and defined contribution elements. So also in UK, the shift from DB to DC is ongoing, with collective defined contribution schemes emerging in UK. So also in Canada, some provinces and employers offer DB and DC hybrid pension plans. And in Germany, employers provide hybrid pension schemes combining DB and DC features, while in France, some sectors maintain defined benefit pensions, while others have DC components. So you can see the practices differ. In GCC countries, Saudi, UAE, Qatar, Kuwait, Bahrain, and Oman, usually pension systems primarily allow defined benefits models, but the defined contributions models also are gaining traction, especially for expatriates and private sector employees. Therefore, some nations are gradually introducing defined contribution elements, even in GCC. In Africa, pension systems usually vary across countries, with some adopting defined benefit plans, others shifting to defined contribution, and some using hybrid approaches. For example, in Nigeria, the mandatory contributory pension scheme was introduced in 2004 with enactment uh, uh, of the of the Pension Reform Act of 2004, which was amended in 2014. In Ghana, it uses a three-tier pension system combining DBBC elements. So you can see the practice also deeper. So also in South Africa, private sector pensions are DC based, while public sector are defined benefit focused. So also in South Africa, you can see is the pension system landscape is evolving, with many countries transiting from DC to DB. In Malaysia, public sector plans is DB, while DC-based employees provident fund for private sector workers is used. In Singapore, Singapore operates the Central Provident Fund, also a mandatory DC pension scheme, and as well in Indonesia. In Indonesia, it has a mix of DB and DC, while in Thailand, it uses only DB for public sector and DC for private sector. So if you look at this global overview, you can see that the practices differ from one jurisdiction to another. Majorly, you can say that the practice in the private sector usually is defined contribution, and public sector is defined benefit. But in many developed countries are now migrating from the DB to ensure sustainability to DC to DB. So now let's have a kind of overview of the Islamic pension fund system globally, which is a retirement savings framework that operates under Sharia compliant principles, where funds provide financial security for retirees while adhering to Islamic financial regulations. The key features of Islamic pension funds, it is interest-free investments. Funds are always invested in halal assets like sukuk, equities, and real estate. Usually when it comes to retirement benefits, instead of conventional annuities, which is life insurance scheme, that is typically not Sharia compliant, Islamic pension funds use takaful by either through work model of takaful or using perpetual sukuk to provide financial protections. So also profit sharing models are used where return are based on profit and loss sharing rather than fixed interest rates. And all these fund managers usually operates under the Sharia, the watch of the Sharia advisory boards, who are experts to ensure compliance with Islamic financial laws. So virtually, you see that it is Sharia compliant. Global application of the Islamic pension systems, that is Islamic pension fund system, we can look at some of jurisdictions. Usually in Malaysia, as we said, employees provident fund includes Islamic pension options, allowing contributors to allocate savings into Sharia compliant investments. Additionally, the private retirement scheme also offers Islamic pension funds, further expanding the sector. In Turkey, usually their Islamic financial system is called participatory financing. So as here in Nigeria, we usually call it non-interest. So in Turkey, it's called participatory. So they have pension participation funds, which is equivalent to Islamic funds, which operate the private pension system, and is offering individual with Sharia compliant way to save for retirement and have halal earnings. So also in GCC countries, Saudi and UAE provide Islamic pension investment options, but particularly for private sector employees, because their government employees are under the defined contribution, defined benefit. So in UK, the Islamic pension funds operate in two ways. There is a workplace pension schemes, Islamic pension schemes, where employers automatically enroll employees into Sharia compliant pension system, but which is usually under the supervision of bigger financial institutions that have the capacity. While in Sharia compliance, while the second one is personal Islamic pension plans, where providers offer self-managed Sharia compliant pension plans. So usually, as we can see, Islamic pension funds are expected to grow further as demand for ethical and faith-based financial products increase. Now, these funds, if you look at globally, when you look at the Islamic pension funds, usually because of the size, they are not segregated usually. This is sectoral analysis of the Islamic Financial Services Board that they always provided in their Islamic Finance Situation Report annually. So if you look at this year-on-year growth, you can see that the banking system has been the one that is taking largest share with 6.9 increase on year, while the Islamic capital markets is growing with 6.1 and the takaful 16.1. So the share of the Islamic financial services, you look at the size of the Islamic capital markets, include the sukuk and Islamic funds, which is the funds under management. So when you look at this also analysis, it will be glaring that part of the Islamic funds assets which are usually the funds, the asset under management, you can see that it represents 4.2%. When you put the two together with the Sukuk outstandings, you will see that it constitutes the 25%, which is close to 28% of the total capital market, because these are the two components that constitute. You can move to next slide, please. That constitute the Islamic capital market. That is the Sukuk outstandings and the Islamic funds under management. So the two combined together constitute the capital market. So the Islamic funds asset under management includes all the funds. That is the Islamic funds inclusive. Because of the size, the Islamic Financial Services Board does not segregate the pension funds because the size is very small, but they are part of the Islamic funds asset that are have the asset under management. So having seen the global practices in pension and the Islamic pension fund management, now let's share our experience here in Nigeria. Usually the Nigerian system, the pension system before 2004 was fully defined contribution, defined benefits, but it was characterized with so many challenges, particularly outstanding pension liability, delay in payment, and other challenges. And this is what necessitated a reform in the sector, and that is what led to Nigerian Pension Reform Act. And from the name of the act, you can see that actually there was challenge, because reform only comes when after there are some issues that happen. So the Pension Reform Act was established in 2004 and amended in 2014, 10 years after its initial enactment. And it established a uniform contributory private sector managed and fully funded pension system for both public and private sector of the country. The scheme provided that both the employees and the employers are to contribute a minimum of 8 and 10% respectively from the employee's basic salary, so that total minimum monthly contribution of a typical employee is 18% of his or her basic salary. And this system is mandatory. This is very important. We have to note that the Nigerian system is mandatory for the public and private sector, particularly those working in the under the federal government. We have 3 tiers of government for those maybe that are not from Nigeria, for the benefit of them. That we have the federal government, which is the central, we have the state governments, and we have local governments. So employees under federal government are mandated to maintain RSA, which is retirement savings account, with pension fund administrators, and this is mandatory. They don't have any option to do it. So the Pension Reform Act also provides that pension funds should be managed and invested by registered pension fund administrators and pension funds custodians under the close supervision of the regulator, which is the National Pension Commission, which is called PENCOM in abbreviation. So we can see in these slides how the arrangement is. Usually, you can move to next slide, please. You can see the pension fund is there. RSA are to be open to all employees that are with the federal government or formal private sector. So automatically the RSA, all funds are to be managed by the pension fund administrators, and the pension fund administrators are not to handle the money, because the system provides for check and balance to manage the risks of squandering the funds. All pension fund administrators are banned from holding the money under their custody. So pension fund custodians, which are usually bigger financial institutions with high capacity, only 4 or 5 of them are registered. They are the one to take the custody of the funds. And usually they are the one to pay the transactions whenever they made on behalf of the pension fund administrators. Then investments also are to be made, and the profit as well as the initial amount invested are also to revert back to the pension fund. And in the case of retirement, then the PFA will pay the RSA holder his retirement benefits in form of lump sum and arrange for program withdrawal or transfer the balance to an insurance company for the purchase of annuity as provided for the system. So all these arrangements are under the close supervision of the of the National Pension Commission, which is the regulator of the pension industry. So as we can see, the system provided that the pension fund administrators are to invest the money as provided by Section 26, 86, and 85 of the PRA 2014. So they are to be invested in the federal government bonds, treasury bills, and related securities, quoted bonds, and debt instruments, quoted stocks and shares, bank deposits and securities, quoted closed-end funds, end funds, and the hybrid investment, quoted utilized investments, real estate investments, and other investments prescribed by the pension com. You can move to next slide, please. So these are the areas where the investments are expected to be made. From the look of all these things, when you look at them, all of them are conventional instruments. They are conventional instruments in the sense that they involve riba, gharar, excessive speculation. Move to next slide, please. And the gharar, as well as even investment in non-halal products, because what is provided is the quoted stocks and shares of the companies, so without any discrimination. So some of the companies that are quoted in the Nigerian capital in the platform of maybe NGX or FMDQ, for example, they are all not Sharia compliant. So in this case, these are some of the Sharia implications of these funds, and that led for agitation for Sharia compliant alternative. As we can see, the conventional nature of these instruments and their non-compliance with Sharia led to agitation for non-interest pension fund system, particularly by the overwhelming majority of Muslims in Nigeria who want to have their sources of livelihood after retirement managed and invested in Sharia compliant manner. As mentioned by Mr. Adil, that Nigeria is having over 100 million. Actually, the number of Muslims in Nigeria is more than 150 million actually, because in most cases the number is manipulated. So with this overwhelming number, and even additionally, the nature of our constitution is a secular in nature, but it provides freedom of religion for all Muslims for all citizens, for all citizens. So in this case, if you say that as a Muslim, you must engage, you have your retirement benefits invested in instruments that contravene the provisions of your religion, of your faith, then there is no freedom of religion. And this agitation led to series of engagement with other financial regulators and stakeholders towards creating a non-interest fund that is based on Islamic principles to cater for the needs of the category of RSA holders who wants their retirement benefits invested in Sharia-compliant manner. And this coincided the introduction of the multi-fund structure by the pension regulator, which is the PENCOM, in July 2018. They introduced the multi-fund structure where the pension funds are classified into 6 funds based on different considerations. The first 3 funds are usually for active retirees, and they are just there in order to balance the retirement volatility based on the risk exposure of the funds, or the risk exposure of the investment. So those that are below 50 years, they can move to Fund 1, where they choose to be there by choice, while others can move to can remain where they are. Fund 4 and 5 Fund 4 is meant for the retirees, while Fund 5 is the micro pension plan. Now the sixth fund is the one that was activated, that was meant for those who wants their retirement benefits to be invested in Sharia compliant manner, which is called Fund 6. For contributors who choose to have their pensions contributions invested in non-interest and ethical investment products. So actually from there we began to have it correctly, and in 2021, the on 22nd June 2021, the National Pension Commission released the operational framework for the non-interest fund, and this served as a formal approval for long-awaited ethical fund to kickstart. So the objectives of the funds were established to establish the standards procedure for the management of the fund by the licensed PFA, and to assist expanding the coverage of the contributory pension scheme by attracting employees with reservations in having their contributions invested in interest-bearing securities, and also to promote financial inclusion within the Nigerian financial system. Considering the number of Muslims in Nigeria, actually many people wants to be financially included, but actually for one reason or another, particularly on third beds, they couldn't. So this also provide them with the option to have their retirement benefit savings invested in Sharia compliant manner. So the pension industry non-interest advisory committee was also established to serve as the as the Sharia body, that is the Sharia Advisory Committee for the pension industry. As we all know, that in any Islamic financial arrangement, there must be a Sharia board which will watch and make sure that all the Sharia principles are protected, which is usually serve as an independent body that will just oversee this. So PNAC operates as an independent body with the principles of competence, confidentiality, and consistency properly enshrined in its operations. It is established for the pension industry to ensure continuous Sharia audit and purification of the investments of Fund 6, and shall also be responsible for the purification and disposal of non-permissible income in case of any non-Sharia compliant investments. So PNAC will make sure that the funds are disposed to charity as provided by so many Sharia authorities. Now, the major issue, as highlighted with the conventional system, is the investment portfolio. Therefore, the Fund 6 structure provided for investment instruments that are allowable, which are deemed to be pension compliant and Sharia compliant as well. It includes government bonds, government support by the federal government, issued by the federal government, central bank, or FGN agencies, and also corporate sukuk or infrastructure sukuk, and ordinary shares. So these are the allowable instruments that Fund 6 is allowed to be invested. And let me put it here that this is one leg of the system that is being addressed for the conventional nature. The other leg of the Sharia non-compliance is still work in progress. That is what has to do with the the first one is program withdrawal after the lump sum withdrawal. That one is okay and has no any Sharia issue because it is going to be still within the Fund 6 purview. But for the under the Fund 6 2, which is the retiree. But the second one which is the annuity. Up to now, we don't have Sharia compliant annuity, which is the alternative of the conventional annuity. So it's still work in progress. So indeed, as a new system that is just introduced, maybe about 3 years back, it has a lot of challenges. Some of the challenges includes one, inadequacy of Sharia compliant instruments, and this is the issue of liquidity management. For anybody in the Islamic finance sector knows that it is a general challenge, not only in the pension industry but in the other sectors, including banking, takaful, as well as the capital market. There is this issue of liquidity management instruments. And this aggravates in the pension industry because of the nature of the funds, there is need for high risk procedure that have been taken in order to ensure the safety of the funds and ensure safe and fair returns. So all investments or all instruments must be first qualified, even if they qualify to be Sharia compliant, they must also qualify some risks compliance provisions of the PENCOM, that is the pension regulation. So they must be pension compliant and Sharia compliant. So this also leads it to be a little bit challenging. If you look at the net asset value of Fund 6 as at the end of the first quarter of this year, active fund is 120 billion, 120 billion 462 million 880, which is equivalent to almost 76 million USD. For the retiree is 11 billion 821 in naira, while in dollar is close to 7 million. So if you look at the net asset value of the pension industry, which is almost 22.86 trillion, which is equivalent to 14 billion 468 million USD. If you take it with the current exchange rate, actually you will see that the percentage actually of the non-interest fund, if you compare it with the conventional or not a net asset value of the pension industry, you will see that it is up to now below 1%, despite the population of Muslims that constitute about 60% of the population. But Fund 6 is still lagging with less than 1% of the net asset value of the pension industry. Also, total number of the RSA as at the end of March 2025, we have about 10,582,000 as RSA holders. Now, if you consider the major liquidity management instruments in the market, which is the Sukuk, is even including the recent Sukuk that was issued just last week by the federal government of 300 billion. Total Sukuk issuances, public Sukuk issuances are still around 1.3 billion, which is 826. That is to say, even if we are to raise the pension industry to 1 or 2%, so the instruments will not going to be enough. And this is for the entire market, not for the pension industry, because the Sukuk are being oversubscribed always because of the value people have seen, and investors, both the retail and the institutional investors, they have seen the value in Sukuk. That's why it is always oversubscribed, sometimes 100 and sometimes with 300, 400% oversubscription. So Islamic banks are there, capital market operators, fund managers, even the conventional banks are also subscribing to Sukuk because of their transactions with the Islamic banks. So actually, the number is very low. So also, if we look at the another challenge is awareness challenge. Actually, many RSA holders are not aware of the Fund 6. and there is no adequate knowledge of the non-interest funds. And actually, some of the RSA holders, particularly of Muslim extraction, they have this I don't care attitude, even if they know, but they don't tend uh, to migrate. So also another challenge is ethno-religious and cultural challenges. In Nigeria, we have a very high index of religiosity, and we have seen this type of sensitivity when the non-interest finance was first introduced around 2011, where many non-Muslims raised concerns that it is a process of Islamization actually. And Alhamdulillah, with the expansion of the Islamic finance industry, many people are getting more enlightened, and this sensitivity is dying actually. So, despite these challenges, there are a lot of prospects that we can see the Islamic pension funds have in Nigeria. Nigeria has a most robust Islamic financial legal framework around the world because we started with a very right footing actually. So that's why the growth is always ahead the global growth of Islamic finance. Uh, just in less than 5 years, I think about 4 or 5 new Islamic banks were registered. Which if you compare it with the conventional sector, you will notice that you cannot have this 100 or sorry 500% growth in the way institutions are introduced. So also the support and synergy between regulatory agencies and authorities. The Central Bank of Nigeria even recently they issued some of the liquidity instruments, the Sharia, the asset-backed papers, which is equivalent to treasury bills, which will assist the liquidity management in the Islamic financial industry. So also the Securities and Exchange Commission and the National Insurance Commission and the PENCOM as well. So this kind of synergy also will support the growth of the Islamic pension fund sector. So also one of the prospects it will deepen financial inclusion because financial inclusion in Nigeria was rated and estimated at about 37% with large exclusion of that in the northern region, which is predominantly Muslims, largely on ethical basis because most of the financial institutions are providing conventional instruments, conventional services. That's why many people are financially excluded. So boosting the investments in non-interest finance sector of the country definitely will also be a great potential for Fund Six because of the large Muslim population and other financial institutions that are there also can take advantage of these funds so that they will build up their businesses. And it will also stimulate contributory, voluntary contribution to the fund since the structure is Sharia compliant. The Pension Reform Act provided for voluntary contribution beside the mandatory one, either by employees in public or private sector. But many people, particularly of Muslim extraction, cannot add to what they have because even the one they are in they were there because of necessity, because it wasn't in tandem with the teachings of their religion, so they cannot go into it. But by introduction of the Fund Six, many people began to add more to their investment savings through their Fund Six arrangement. In addition, one of the also prospects and potentials of Fund Six, you can see that in Nigeria there is appetite for ethical financial system generally because you can see in just no time of our beginning, we have 5 full-fledged Islamic banks. We have one Islamic banking window. We have 5 takaful companies and more are coming. We have also 9 sukuk issuances and many standalone fund managers actually. And we have many halal mutual funds that are also launched and been approved by the regulator, the National, the Securities and Exchange Commission. And it also, one of the potential, it will stimulate the state contributory pension schemes, because many states in northern Nigeria where Muslims are dominated couldn't key into the Fund 6 because of their reservation on the investment nature. They cannot take their citizens or their state citizens to the system that they know it's not in tandem with their religion. But in the federal government, maybe they are mandated to do so. They may have little reservation. So, and as well, it will create employment opportunities for Islamic financial professionals. Currently, there are about 20, sorry, there are 19 PFAs in the country. There were 20 now, somewhere merged. At least each PFA must require the services of Islamic finance professional. And as the funds grow, they will require more staff that are expert in Islamic finance. And this is also another opportunity in the sector. By way of conclusion, there is need for more stakeholders engagement to explore more Islamic instruments, and there is need also for more innovation on non-instrument instruments. There is need for more awareness creation on Fund 6 by PFA, PENOP, and other stakeholders of the non-interest financial industry. And also, PENCOM and PENOP should benefit from the experiences of other jurisdictions who have long experience in the Islamic pension fund management globally, as we have identified. So this is the end of my presentation. Thank you very much for your time. And I thank also Adl Advisory for granting this opportunity to present. Thank you very much once again.
Thank you very much, Prof, for that very wonderful presentation. And also, thank you for giving us not just the overview of Islamic pension globally, but also digging deeper in giving us more focus as far as Nigeria is concerned. Not just talking about pension, Islamic pension in Nigeria, but giving us a full detail as far as the Islamic finance industry is concerned in Nigeria, cut across the banking sector, the takaful, and also looking at the capital market. And I think you've been able to give us a very detailed presentation. If you are just joining us, or perhaps you joined us amid the presentation, you've been listening to Professor Adam Abubakar, who is speaking to us today, looking at mainly the global practices in Islamic pension fund management and investment, giving us more focus as far as Nigeria is concerned. And I think majority of our participants may have perhaps one question or the other. You may also want to have a sort of contribution. Of course, we are going to give room for that, and we are going to allow you to, in a way, share your thoughts if time permits. And once again, this webinar is organized by Adl Advisory, which is based in Kuala Lumpur, Malaysia. It is one of the series of webinars that is organized by Adl to ensure that we educate, enlighten, and also provide literacy for our people, for Nigerians, non-Nigerians, and people that spread around the world that wants to know about Islamic banking and finance, and also want to know the updates, the development across different jurisdictions. So as part of our contribution at Adl, we ensure that we invite to the webinar speakers, experts, global scholars in different fields of Islamic finance to give us contribution as far as Islamic finance is concerned. And that way, we are trying to bridge the literacy gap as far as Islamic finance is concerned. So I've been seeing a couple of people raise up their hand. They want to ask questions or they want to make contribution. We are going to, for the sake of time, we are going to have a very, we are going to have 3 questions. Whether questions or contribution is going to be 3, inshallah, just so that we can manage our time and we can be able to wrap up on time. So I can see Brother Ridwanullah Adedeji raised his hand. Please, kindly go straight to the contribution or to the question. If it is a question, kindly go straight to the question so that we can be able to accommodate other people. Please feel free to unmute yourself.
Assalamu alaikum warahmatullahi wabarakatuh.
Wa alaikum salam.
My question is that this Fund 6, do we have PFA using it already in Nigeria? And if we have, if you can give us names of few of them so that we can key into this.
Okay, thank you very much for this question, which is very important. Actually, I have highlighted this in my presentation. Maybe it wasn't clear. Actually, the Fund 6 is put in such a way that as all employees are mandated to open RSA, so all pension fund administrators are mandated to open Fund 6. So it is a balance actually. So it's not optional. All 19 PFAs that we have a window for Sharia compliance. And this is one of the practices maybe I have never seen in other jurisdictions actually, because most of the Islamic pension funds or contributory pension funds that we've seen globally are voluntary in a kind of private pension fund. While in the case of Nigeria, it is the total migration from the defined contribution benefit to defined contribution, where all employees are mandated to be there. So since there was agitation that there is need for alternative, so the alternative was not provided only for one. It's not like banking where we have Jaiz Bank, Taj Bank, Lotus Bank, Suntrust, Summit, and all of that. Rather, it is mandatory for all PFS to have a window for Fund 6, which is the Islamic pension fund, actually. So it cut across. If you are an RSA holder, you have your retirement savings account, you have to go and ask them that you want to migrate from Fund 2, 3, or 1 to Fund 6. And it is mandatory and they will all do it. And I believe they will not hesitate to give you the migration fund so that you can transfer your RSA balance from conventional fund to Islamic or ethical fund. I hope I'm communicating. Thank you.
Thank you very much, Prof, for that very detailed response. I believe Brother Adedeji already got that answer and is able to also work on that going forward. I think I have another person, Brother Mansour Lawal is raising his hand. Please go straight to the question. Feel free to unmute yourself.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Salam.
Yeah, I just want to shed a little light concerning the last person that asked a question concerning Fund 6. Yeah, actually, any of the PFA he's operating with, they definitely have that fund. So he can just walk into his PFA and then ask them to give him a form to fill for migration from either Fund 2 he is, or Fund 3, or Fund 1 down to that Fund 6. So all the PFAs virtually, they operate that Fund 6. Assalamu alaikum wa rahmatullah.
Wa alaikum salam wa rahmatullah. Thank you very much for also giving us more direct contribution and also amplifying what was said by Prof. I think, Prof, I would want to ask, because just like you are the chairman for the pension non-interest committee, looking at the vast challenges that we have, or I mean, you know, I could remember before PNAC was set up, you have contributed largely advocating on pension, Islamic pension, writing articles, also speaking at events about the need to raise or to have an Islamic alternative to the conventional pension. So you've agitated a lot, and Alhamdulillah, most of those agitation, most of those contribution, raising awareness, most of those things were also considered, and part of Alhamdulillah, you coming on board as the chairman of PNAC. I would want to ask, bearing in mind before PNAC was set up, and now that we have PNAC. How have we been able to bridge the gap, and how have you been able to address the impending challenges that we were seeing before PNAC was set up? So based on your own on the ground contribution and also some of these challenges, I mean, far away from the theoretical challenges, far away from the just trying to look at the practical challenges that you can see that the PNAC is facing. How have we gone so far, and how have we been able to move forward?
Yeah, actually, as I highlighted that there are a lot of challenges, particularly before we came on board. And the challenges also continue, but we are taking some holistic approaches to resolve them, particularly the two major challenges. One would be with the gap in knowledge, which is creation of awareness. So I was, as you said, even before the introduction of Fund 6, for about 10 years now, I have been advocating for need to have a Sharia compliant alternative. And coincidentally, that was the reason what prompted me even to went to go for my second PhD there in Malaysia, and had my PhD on pension system where to have alternative. And Alhamdulillah, some of the recommendations were considered, and here we are now after 10 years after the completion of the research. Here we are with the Fund 6 reading more than 130 billion in Naira. So Alhamdulillah, and it is growing with more than 30% year-on-year growth. So the awareness also continues. It is a work in progress. Alhamdulillah, we continue to do it now in a very landscape, because now we have the support of the operators and the regulators as well. And I think even during our inauguration, one of the things I emphasized on was the issue of awareness creation, because many people are unaware. And the regulator promised to mandate all the operators to create more awareness, which is part of the actually tradition of the regulator, that is the PENCOM. Whenever there is any development in industry, they do their own advocacy and also mandate the operators to do the same advocacy. This is on the one hand. On the other hand, the component, the second challenge that was also in place was the issue of liquidity management, where instruments to be invested in, or to invest for six assets in, are very, very limited in the market. Some of them are available, but because of the fear by the PFAs, they cannot go into any business because there is no any regulated body established by the regulator to advise them that this instrument is Sharia compliant. So that's why they were skeptical in investing. So Alhamdulillah, with the coming up of PNAC, we have started bridging the gap, and Alhamdulillah, we continue to bridge the gap so that we become a connecting rod between the providers of the instruments and the off-takers of the instruments, who are the pension fund administrators, inshallah. So it is already work in progress, and we seek the support of both the regulators in the financial sector and the operators as well. So thank you very much for this.
Thank you very much, Prof, for that response. Because back in Nigeria, I'm aware that, I mean, when I was also working back in Nigeria, you've been invited as well to participate in a lot of gathering, workshop, and also personal activities, which are geared towards ensuring that the federal government does not just look into Islamic banking, but also. Now, can you hear me? Can you hear me? Please, can you hear me? Am I audible?
Yes, I can hear you.
Oh, okay.
Can hear you. Okay, yes, we can hear you loud and clear.
Okay, thank you. So I was trying to contribute on what Prof said. I'm trying to take a flashback into some of those activities that has been jointly done. and also individually carried on by Prof in ensuring that the regulators or the government does not just look into the banking sector, but also holistically taking care of all the needs of the Muslim faithful as far as financial services are concerned. And that should take me to another question, because when Prof was, when he was presenting, he mentioned and touched on the fact that even though we are seeing what we have recorded as far as the RSA is concerned as of this year, it is still barely scratching the surface, which invariably, according to the presentation of Prof, stated that we are still less than 1% as far as the Islamic pension is concerned. So, Prof, looking at that, we are at less than 1%. And when we try to look at the population, like you rightly mentioned, that Nigeria has a population of Muslims that counts up to 60% of the entire population of Nigerians. And looking at that, just opposing that, how are we able to bring it closer? How do we want to demystify the challenges and leveraging on the existing customer base of Islamic banks? How do we distribute this? Because the issue of awareness is there, where you mentioned that people are not aware. And when people are not aware, they do not know the service that is good for them. So how do we demystify this and bring this a bit closer, maybe in the next 3 to 5 years? What do you think is going to be the role of not just the regulator, but looking at, for example, maybe Islamic associations, organizations? How do we demystify this in order to bring this information to?
Yeah, actually, as I have recommended, towards the end of my presentation, that the burden is not only on PNAC or on the operators and the regulators of the pension sector alone, because in the pension sector, it's not as the banking and the capital market as well as the CAFUL, where you have a standalone institution that can champion the advocacy. And whenever it champions the advocacy, there is value that they will see once these products are accepted. But in the pension industry, usually all PFAs have this option, so there is no competition. If any PFA promotes it, it is just within his own funds that is under management, that other people will now migrate from one fund to another. It's not that they are having more funds where will generate more profit. So that's why some of them are actually like lackadaisical in advocating for the Fund 6. But then it's not only for the pension sector alone, because other financial sectors or non-interest financial sector of the country are also beneficiaries, because the funds there in Fund 6 will assist in the growth of the Islamic finance industry, which, if it grows horizontally and vertically, all the three key critical sectors of banking, capital market, and takaful are going to benefit from it. Therefore, I recommend, as you've seen from my presentation, that all stakeholders, be it institutional or professional bodies like IFFP, NIFIAN, and other religious organizations, they will take this mantle if they are aware, actually. Because the another gap is that even those Islamic organizations are not aware of the existence of the Fund 6. I have seen many situations where I found myself in the midst of RSA holders who I deem to have known the Fund 6, but at the end of it, you will find out nobody knows about its existence. So actually, the work of creating awareness is very huge, and it's not only for PNAC or pension industry, but it is for all Muslims organizations. Thank you.
Thank you very much, Prof. And on the last note, which is going to form the last question, is that is there any, looking at the situation right now, is there any opportunity as far as the Islamic pension fund management is concerned in Nigeria? Is there any opportunity for outside players to tap into the system? Is there any opportunity? Is there any areas that can be looked into?
Yes, actually, there are a lot of opportunities because internally, as I mentioned, there are opportunities for job creation, and there are opportunities for experts who can contribute to develop products that will assist in liquidity management, be it within the country or outside the country. They are all welcome, because one of the key challenges is that we lack the instrument that will assist in taking some of this in managing the liquidity of the Fund 6. So if we have experts who are versed in this and have very long-standing experience in this, so there are a lot of opportunities when they come, and also there are opportunities when it comes to training, because as it stands, most of the PFS, as I told you, we have 19, and they are all mandated to manage Fund 6 as part of the funds they manage. Most of them don't have the Islamic financial knowledge. So there is another opportunity for experts, particularly advisory providers and trainers, as well as the consultancy providers. There are a lot of opportunities in these financial institutions to actually develop their capacity to know. They have to know internally before even they go outside and create more awareness. And I believe once they got aware, they will also have value. If you promote Fund 6, I believe by promoting it, you will attract more RSA holders to come to your management fund, actually to your PFA. So I believe there are enormous opportunities within and outside the country for pension fund asset in the country. Thank you.
Thank you very much, Prof. I think I won't be doing a good justice if I don't take this last question that is written by one of our participants. The person is asking that for those that have collected their lump sum, when is their annuity, when would they have annuity option to convert to Sharia compliant instrument?
Actually, this is a very important question, and I believe I have been receiving this at any point of presentation, a public lecture, webinar, or normal presentation. Whenever those that have already exited out of the service and they are not active retiree, they are retiree, they are not active RSA holders. So as I have said, they have two options. The first one is to have their program withdrawal with their PFA. For this one, we have option, which is the retiree Fund 6. That is the second window of the Fund 6. It is applicable in all the PFS. And this one is being taken care of by the Fund 6 structure, where you can have your own RSA Fund 6 retiree invested and also remitted back to you in a Sharia compliant manner. But the second leg, which is the annuity, which is the Sharia compliant, which is the conventional insurance, at its stance, we don't have alternative for it. So for those that have already in funds in annuity with any pension, with any insurance provider, actually there is no alternative as it stands. But we are working tirelessly to make sure that once the review is made, this also has been taken care of, so that there can be inter-insurance company movement where those that have already retired and they are placed under annuity can also have an alternative. But as it stands there, we don't have alternative actually. Thank you.
Thank you very much, Prof, for that very detailed responses, and also for that very rich presentation. We really appreciate your time. And again, for those that have just joining us, this is a webinar organized by Adl Advisory. And I think at this point, it is fair enough to just wrap up this session. And before I wrap up the session, I want to, on behalf of our founder and the CEO of Adl Advisory, that is in person of Dr. Mufti Yusuf Sultan, and the entire team in Kuala Lumpur and also in Dhaka, Bangladesh, and also on behalf of our sister company, IFA Consulting. we want to say a very big thank you to all of you for joining, and especially a big thank you to our speaker, that is in person of Professor Adl Abubakar, the Chairman, Pension Industry Non-Interest Advisory Committee of the Pension Commission Nigeria, for the valuable presentation and experience sharing. And also to you, all our participants that have joined us in this very inciting deliberation. I'm trying to talk of all our participants from all over the world. I mean, top on the list, we have Nigeria, and we also have Bangladesh, we have Malaysia, Kenya, Ghana, Senegal. We have participants also joined from China, Uganda, Gambia, Somalia, Cameroon, and Afghanistan. We want to say a very big thank you to all of you for sparing your time to join this conversation. And I want to tell you, the conversation has not ended. Please stay tuned to our social media platform on LinkedIn, on Facebook, and also you can watch this again on YouTube. Please check the chat box in this webinar. You will find the link for you to watch again or to share to your friends, and also to perhaps you want to make reference of this very inciting webinar. You can also do that by clicking on that link that is shared in our in the chat box. And again, till we meet again, it is not the end. Like I mentioned, this is a monthly webinar series. The next one is going to be in June, inshallah. Please stay tuned and watch out for the next speaker that we are going to be inviting. And do have a good rest of your day. And again, I remain AbdulAkeem Akinbode. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much.
Thank you.
Yeah, thank you.
Thank you. Thank you for joining.